Let's get across to IG Markets as promised to speak with Chris Weston. Chris, we saw quite a lot of choppy price action overnight. You'd probably expect that on a day where we're anticipating so much from Bernanke. We were nervous about what he'd say. Tell us what you thought were the main takeaways in the end about that session on Wall Street for us.
Well, I think you've got to look at Europe as well, Brooke. I mean, you know, the Fed was a very interesting side of things, and you know, it's clear that people were positioned for not just Operation Twist, but perhaps a change in the Fed's composition of risky assets, perhaps more sort of mortgage-backed securities, and even an expansion of that balance sheet as well. I mean, if you look at the fact that gold traded down from 1605 down to 1590, and it's come back a little bit. But you're right there. I heard you in the synopsis saying that he's left the door open. I mean, clearly the final paragraph of the centre of the statement has suggested that he does have firmly an easing bias there, saying that more asset purchases may be appropriate. You know, they're trying to promote sustained job improvement in the labour market. Some people would argue that that's not happening at the moment with QE1 and QE2. But you know, clearly, if there is a deterioration in an economic performance in the US, then he has every justification, he feels, to come out and do a balance sheet expansion further down the line. My best guess is that will probably take place around September, but we're going to have a situation now that the market firmly believes that Bernanke is primed, ready to print money, and the worse the data gets now, clearly you're going to see further upside in the likes of gold. You're going to see further downside in the likes of the US dollar as well, as people really anticipate movement by the Fed, perhaps sometime in September would be my best guess there. But you know, I think you've got to look at Europe as well, and markets came straight back again, and the reason being is that we've now got a government in Greece. That's a really, you know, obviously a big positive that we've got to have this trio in place at the moment, and we'll hopefully get some sort of renegotiation coming through. And then I think you've obviously got the situation where it's very public now that you know, they're talking about using the EFSF and the ESM, the bailout funds, to come out and actually buy bonds in the secondary market. Merkel, okay, she's not fully behind it, but she hasn't completely dismissed it. And then you've got ECB member Mr. Kur coming out saying last night that he expects perhaps a very clear discussion about rate cuts in Europe at the next meeting, something the market hasn't fully priced in yet, and also saying, you know, why haven't why haven't we started buying bonds using this bailout fund as it stands at the moment? And Spanish debt came down quite sharply on the back of it. So, yeah, I think all in all, you've got Bernanke standing behind the market if necessary. The put's firmly in place now, and you've also got some clearer side of things in Europe as well. So I think, you know, all in all, net for me, it was quite a positive session, despite the you know, the falls that we saw in risk assets.
Although when it comes to disappointments on the QE front, commodities are as sensitive as they get, I suppose, and that we did see some pressure on those commodities. So how do you think that plays out for us today? The SPY's up by 0.4%. Do you think we'll do that well?
No, I don't. I think we're going to have a very flat open. Look, the SPY's. I mean, I think if you look at what's actually happened since the close of the cash market, we're seeing a little bit of a pullback in some of the risk assets. Euro's down a touch. You're seeing US futures down 15 points or so on the Dow futures. So I think we're probably likely to have a pretty flat open, to be honest. I mean, BHP closed, the ADR closed around up 13 cents or so. Yeah, I think oil prices are the ones that you've got to look at the moment, and oil prices since yesterday's cash close are down 4%. They got absolutely smoked last night, and you know, you can look at those inventory numbers that we saw coming through, the highest I think since February 1999, or certainly in the you know, 20 odd years or so. It's not looking particularly good, and people saying, you know, oil could be a leading indicator here. There's just a lot of oil out there at the moment, huge amounts of inventory. So energy stocks aren't going to do particularly well today. Not a lot of data to look at, so you know, I think it's going to be kind of a muddle through. What I will say is the volume yesterday was really good. I mean, we saw $5.7 billion worth of volume, and if you look at the SPY, the actual physical traded futures contracts, last couple of days, massive volume. I mean, we saw 133,000 contracts last couple of days coming through on the SPY, and that's really big compared to the, you know, last week's average was 29,000. So there's a lot of futures activity, and that could really be the driver of equity markets going forward. So yeah, not a lot to lead. Gold price is down a touch from yesterday's close. It looks like Newcrest might open down about 1% or so, and I think utility stocks are looking quite interesting at the moment. I think, you know, they didn't do particularly well on the S&P last night, but the whole point of what the Fed's doing is trying to push people into these higher yielding stocks as well, and you know, perhaps that's one place you can look at the moment.
There's potentially trouble on the horizon tonight, though, isn't there, Chris? We've got to get through the China HSBC flash PMI today. Assuming that goes well, we head into Europe and we get a read out of Europe, the flash PMI there. But also, what, a Spanish bond auction?
Yeah. Well, the Spanish bond auction's good. It's not a huge amount of money. I think totally they're auctioning off 2-, 3-, and 5-year bonds. Last night we did see a significant move down in the 10-year. That was down 30 basis points. It's a really big move. Some people are saying, you know, it's to do with this talk of using the ESM. People are saying perhaps it's profit takers from people who've been shorting Spanish bonds. Who knows? But what is clear is that there's not a huge amount of money. I think in total it's around 2 billion. What is clear though, if you just take the 2-year bond that they're looking to auction off tonight, yields since the last time they auctioned this same bond back on the 1st of March are up about 280 basis points. So, you know, what does it mean? It means people are going to be reporting that Spain had to hire higher borrowing costs at their auction, which could be a headwind. We don't know. But, you know, it's clear we're going to be looking at that bid to cover ratio coming through because, you know, Spanish bonds, as we know for some time now, has been a big indicator of price action. Euro looks like it wants to push higher. You know, Aussie dollar looks like it wants to push higher as well. And I think it's going to be quite interesting, Brooke. You've got this Greece and Germany football match at the back end of the week. I think it comes on Friday. And there's, from a very contrarian point of view, people saying that if Germany lose that, then the chances of actually renegotiating with the Greeks falls over a little bit. So I think, you know, people are going to be covering and putting on protection ahead of that football match, perhaps.
Oh, you Europeans take this soccer so seriously, don't you? Thank you very much. Chris Weston, we appreciate it. Thank you. Yeah, really important to watch out for that one.